It's a Top That Trade Friday. Joining us for fun and games, Alan Knuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business News contributor. Round number one, guys. Twice is nice. One analyst believes a twice-in-a-lifetime opportunity is happening in the stock market. The first was the dot-com run. Now it's the AI run. What do you think? Are you AI bullish or AI bearish?
Well, I'm bullish regardless of the AI, in addition to AI. So 7,500 has been my target of that drop from that top that we had in April on that old high. I think the analysts are looking at 7,700, but I don't know if it has to be AI driven. I think we're just in a strong market and we've got a strong trend, but that's been the case for essentially 50 years with two pullbacks that were erased in short order each time.
Before I answer, let me check artificial intelligence, see what it says. No, I'm not going to do that. But it's interesting that people are saying this because I've been making this case for the last couple of years.
Yes, you have.
This is the new internet revolution. This is the new thing. This is going to be transforming of the economy. And a lot of the old timers that are looking at valuation saying everything's overvalued and, they're not focusing on the real thing. And you go back from history, when you get transforming technology that changes the economy, there is so much growth potential that's being priced in. Now, once people start to realize it, that's when you got to be wary.
Round number two, cheap or trash heap. The stock market rocking to record territory. That means stocks are expensive. What commodities or stocks do you think could be a bargain buy?
I think right now you got to go with the unloved stocks, and that continues to be energy. If you look at every valuation of every other sector, energy is a bargain. And I'm not saying there's not challenges in the energy industry right now. There's a lot of question marks, about supply and demand. But ultimately, it's sensing to me that we're close to a major bottom. When I look at the potential demand growth for energy over the next couple of years, whether it be powering artificial intelligence, data centers, in good old-fashioned factories and cars, and I think the market is in a very complacent area right now. They've been the beneficiary of a lot of free barrels of oil from the strategic reserves. They're going to be replaced. So I really like this sector. You want to buy the sector when nobody loves it, and that's been the energy sector this year.
First off, let's say that was one of the best trades made in a long time, was selling oil at 80 and then refilling it back here at the 60 level. But we'll talk about that another time. XLE, the energy ETF, is starting to show some energy. It's broken above 90, which is critical. We've been trading between 80 and 100 for 3 years. So a move above this 90 can send it to the range top, and then a breakout sends it to 120, which is 25% up above.
Round three, pop shakeup. Dr. Pepper has passed Pepsi. Pick a soda stock to pop.
My top pop pick is I'm going to be a Pepper for sure. The PE ratio is 14 compared to 19 for Pepsi and 25 for Coke. Coke's up at its highs. Yeah, Pepsi maybe has bottomed. It's still, still 25% off its 2023 highs. So a value might be there. But if you look at the KDP chart, I'm also seeing that my bullish divergence, the money flow and the bullish divergence that I like to see, where you see new lows in price for the year, but not new highs in implied volatility. That's telling me there could be a sentiment shift here. And it is impressive that, Dr. Pepper has actually beaten out Pepsi, the behemoth that Pepsi is.
It is. You got to look at the history. Coca-Cola came to town. Pepsi-Cola shot them down. Dr. Pepper fixed them up, and now they're drinking 7-Up. Okay, there you go. That's the whole history right there. Listen, the cola wars have been going on for generations, right? Coke versus Pepsi. Maybe Pepsi needs to bring back the Pepsi Challenge. That was one of the greatest marketing schemes of all time. But they've got complacent. They really were relying on their snack food business. That's been struggling just a little bit. But this is why I think Pepsi is way underperformed Coke in the market, but it still pays a very healthy dividend. And I think the upside for Pepsi is unbelievable because they realize they've got a problem.
Staying with that theme for our bonus round, can you name the super soda among consumers? Is it Coca-Cola, Dr. Pepper, Sprite, Pepsi, or Diet Coke? What's the most popular?
I think Coca-Cola is still number one. That's my belief.
I was on the train before, so I'm going to stick with Diet Coke, or as we call it in Mexico, Coke Light.
That is true. But the answer is Coca-Cola. Phil wins this week. Business First AM will be right back.
That's a lot of sugar.